The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the August 2nd, the magical, magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 ship, well, it means that we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. Can't dial them, we've got you covered there too. Go ahead, send me an email. Let those fingers do the walking. Send it to Steve at TFNN.com. Inside the subject heading, please put radio show question, and in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, all the indices, with the exception of the trannies, are trading to the upside. The Dow's up 35, the S&P 6, the NASDAQ 50, the Russell 4, semis 41, New York Stock Exchange 35, Wilshire's up 98. The spot volatility is also up. It's up above its 50-day exponential moving average. That's always a dangerous thing. Gold is up $5. Silver is basically flat, trading out at $25.50. Lights we crude down nearly $3, trading at 71 and change. Natural gas is up 7 pennies, and the 30-year Treasury up 1 tick and 13.30 seconds, trading out at 166.04. Lead the charge dollar-wise, the upside. You've got Shopify, that's $46. Credit Acceptance Corp, 35. Tesla, 31. Mercado Libre, 30. Square is up 29. To the downside, Global Payments off $19 or 10%. Generac Holdings off 4% or $18. eHome Household Services down 35% or $10. Fidelity National off $7, about 5%. So there's plenty to look at. Of course, I want to look at what you want to look at. No questions. Oh, I take that back. There is one question. It's in the Tiger's Den. And the Tiger's Den, this comes from Ruby. Steve, are we going to see finally a crash? Are you talking about a stock market crash, Ruby? Because if you are, then the answer is absolutely, positively not. And I'm being serious when I say that. Now, somebody might say, oh, come on, Steve-O. How can you possibly say that? I mean, after all, Ruby's asking the question, but how can you possibly make that definitive statement? You know, and that's a great question. And so the answer to that question really lies here. Let me just change panels. And so stop sharing this and start sharing this. So now here's going to be our Dow 8-panel chart out here, where we start with the quarterly chart. That's in our upper left-hand side. Monthly chart next to it. Then we go weekly and then daily. That makes up our top section. Then we've got our 30-minute, our 65, our 130, and our 195. Now, what's really important here, Ruby, are these top 4 charts out here. Every single bear market. So let's not call it a crash, because I can't say this about a crash. So I'm assuming your question is not so much, hey, are we going to have a crash, although that might be the question, but more so, wouldn't it be, are we going to have at least a 20% correction? Right? I mean, I'm thinking if we have a crash, there's at least that 20% correction, or am I making an assumption here that I shouldn't make because your question is referring to something else? So I'm going to go with that as the thesis here. And what I can share with you, Ruby, is I've done the study. So years ago, it's probably about 10, 15 years ago by now, I spent a lot of money and a lot of time taking a look at thinking that celestial-wise, that there was some set of parameters that was present before, some consistent set of parameters that was present before the beginning of every bear market. And guess what I found out? There wasn't. And that means I took the New American Ephemeris, and I took about 300 years worth of data, so pretty solid testing out there. Of course, I didn't have 300 years worth of stock data. I only had 130 years worth of stock data, and it was with the Dow. So my entire study is based upon the Dow, and that's why I'm as definitive in stating that, no, we're not going to see some type of bear market or 20% crash, or at least as we speak right now on August the 2nd at 1:11 in the afternoon. So what I did find, and that's how I generated the Rhodes Momentum Indicator, and prior to every single bear market, not 99% of them, not 95% of them, not 80% of them, but 100% of them was a confirmed Rhodes Momentum Indicator top. Here's the daily time frame. We do not have that pattern present as we speak right now. That was negated. We did have the pattern out here. That was the May 10th high, but that got negated when we had a close above that. It was either the end of the prior week or it was sometime last week out there. So that pattern doesn't exist. If it did exist, then I'd say, okay, there's the potential for that. We do not have the pattern is present, but it is not confirmed on a weekly time frame. So again, and it needs to be confirmed, and it is not confirmed as we speak. And the same holds true for the monthly. In fact, if we take a look at the monthly time frame, the monthly says, geez, we're just going to have form bar number 6. And from a TD9 count standpoint, we might not have a top from that pattern for 3 to 4 months from now. And I'm not saying in 3 to 4 months is when we have some type of major market top. But yeah, as far as the pattern that is present, that is before the beginning of every single bear market over the last 130 years. Don't trust me. Go do the work on this yourself. If you'd like to understand that pattern, just subscribe to Mastering Probability. There's plenty of resources in the archived workshops that will teach you that exact pattern and what to look for. So, Ruby, I feel 100% confident in saying no. There's not going to, we do not have the signals present right now to suggest that we have a bear market coming anytime soon out there. So I hope that helps you out and the reasons why. And I always like to say everything in life happens for us. And here's an example where it most certainly did, because I was on a mission, a real mission, to find that set of parameters, celestial set of parameters. It could be conjunctions. It could have been anything out there, and I built a software to apply each of those significant celestial aspects on the charts to go see if they were present anywhere near a significant market top, and there was nothing that was consistent. But I also had this Rhodes Momentum Indicator signal that I was working on, and it was at the same time. So, and it was that pattern, Ruby, that was present at the beginning of every major bear market. And that was why a month or two ago, when we had a call from Victor in Paramus, New Jersey, he was also suggesting the same thing. And I was definitive with him as well at that time. And the answer was no. And the reason why I was so definitive is because those patterns that we just took a look at were not present. And not that this time can't be different. But let's just go with the odds. Let's go with the probabilities. Steve Rhodes with TFNN. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So, back to my last question out there, the only question so far that has come in for the day from Ubri. I'm not saying that the markets won't go down or can't go down. We are in the unfavorable seasonal cycle. That's a different question than is there a market crash, or are we at the beginning of a bear market out there? Markets have gone higher for so long. We have to always do. This was the question that I posed, inside the Tiger's Den, and Ruby was kind enough to share with us that what she sees on the internet is a lot of folks talking about, an impending market crash out there. And granted that economically, things don't look so promising across the globe. I mean, for those of you that like sports and watch the Olympics, which appears to not be many, they're not getting the greatest of ratings these days. But any of you that are watching and you take a look at the pictures in Tokyo. Now, I've spent a ton of time in Japan. I used to be over there once every 3 months. So I've spent a lot of time in Japan. And for me, it's sickening to turn on the TV and see it as an absolute ghost town. I mean, they're on just absolute complete lockdown over there. So, and it's like that in Germany. Geez, in Germany, the police are out attacking people that are protesting, peacefully protesting, that is lockdowns. And those folks are, so there's a lot of problems around the world out there, Ruby, and maybe that's a lot of what people will talk about. And as bad as things are over there, money still is going to have to flow somewhere. Money always there's a big ball of money that is always traveling around the globe. It's looking to park itself because it doesn't like to always travel. And when it finds confidence, the area that it finds confidence in, it can't hide from us. And that's where you and I'd like to take a look at global capital flow. And as I pointed out in the Tiger's Den, I guarantee you that all of those folks that are discussing doom and gloom out here don't have a clue when it comes to global capital. They don't think in terms of global capital. It's hard to think in terms of global capital. You think in terms of your U.S. dollar, what's in your bank account, how your portfolio is traded in your local currency. But that's just not how the system actually works. Now, this chart here, here's our table. This is updated. We're in our week 31, the beginning of week 31, I believe, for since the beginning of the year. And so this is a analysis of where capital has been flowing for 2021. And as we take a look at this, it is the U.S. stock market that is in the lead as we take a look at stock market indices. Now, short, not that far behind, as in Australia. Kind of hard to imagine, but they're in also like a complete lockdown state over there. They've got an absolute dictator that's in control. But nonetheless, capital is they're up about 13% in terms of U.S. dollars and 16% in terms of euro. The S&P's up 18 and 21 respectively, the same, and the Dow is 15 and 18 as well. You've got the DAX it's got money flowing into it as well. Now, when we really see the concentration of capital, there won't be a close second place out here. And so there is right now, but capital is flowing into those areas. It's not flowing into Asia. It's not flowing into the Shanghai or the Hang Seng or the Nikkei at this stage here. It hasn't for the calendar year, hasn't flown into gold. Gold's off 4%. I'm not saying that it hasn't bottomed or what have you, but we're looking at global capital flows out here, and that's what will keep the U.S. markets in pretty much in lockstep. Now, that doesn't mean that we won't see a decline, and so it's important to understand where could we see those declines. And we're talking 3 to 4%. We have some fairly wide profiles that are out here. Both the ES, the NQ, and the YM, the Dow at this stage here, are signaling that we're in a consolidation pattern. I don't know how long this consolidation will last. It could end tonight. It could end tonight for sure if prices were to close above the top of those profiles. But that's not where we're looking at 1:22 in the afternoon. And so if we take a look at where is it that the ES Mini could trade down to, well, we know that support is at 43.01. In the Dow, it's at 34.202. In the NQ, it's at 14.582. Inside the Russell 2000, well, it's really at 21.36. Out here, there's a weekly profile that's attempting to form with the bottom of that box being at 21.74. That's the only thing I've got printed on my screen right now are the bottoms out there. Could the Dow move even lower? Yeah, because it's in a larger consolidation. That is the yellow box that is out here. And so just simply moving back to test the bottom of that consolidation in the 33,000 area is no big deal. It's just part of the pattern. Now, somebody might now that's sitting there saying, hey, wait a minute, Steve-O, the equity future contract is trading at 34.7, 34.8. And you're saying it's no big deal if it gets down to 33, 1,700 points. It's no big deal with regard to the consolidation pattern that it's in. And so that would be a gigantic buying opportunity should it occur. And there's a possibility that it will occur out there. So now I'm trying to talk what I consider to be real key information here, because we know how these profiles work, and they just provide you and I with a competitive advantage out here. Now, mostly we have the daily time frames out here, but these are the patterns that are in play because we're in the unfavorable seasonal cycle. Absolutely, price could move back into those lower ranges out here. But again, and will they? I don't know. The more the time goes on, the more likely the answer is no. So August will play a fairly key element in this. And so, again, we might just have a consolidation between now and, in essence, sometime in October. So, anyways, that's where we're at with regard to the markets. What else is it that I can show or share you? Now, one of the reasons why we could see that a precipitous drop out here really be a combination of two factors. The one factor I could discuss with you in detail, and that's the way that the spot volatility index is trading in relationship to its 50-day exponential moving average. The second element will be discussed during the upcoming show, the Power Trading Hour with David White, and he will talk to you about what's going on with regard to short sellers in the market. There's nobody here, inside the TFNN group that has that data nailed down so well as David. And so in this instance here, we don't have much in the way of short selling. It's easy to have a steep decline. Well, when you put that together with the spot volatility index, which right now is trading at 1918, it's above the 50-day exponential moving average, which is 1793. bad things can happen. Now, when I say bad things, I'm not talking about market crashes. I'm talking about the market moving lower, and it can move lower relatively quickly. And the reason is because you and I have done this study out here. We've paid attention to how this S&P 500 top panel out here trades in relationship to the spot volatility and its 50-day exponential moving average. And so right now, it's a dangerous setup for the S&P 500, which then says, okay, price could easily pull back towards the bottom of that profile at 4301. Here you've got a daily, weekly, monthly, and quarterly time frame for the S&P 500. You will notice that last week, was it last week? No, it's this week. I take that back. That we have a brand new weekly profile that is also attempting to form. In fact, let me just expand this chart out here. Let me turn off a couple of things just to make it easy. Let me turn off my trend lines out here. It's an automated tool that I've got that's running right now. That takes up a tremendous amount. And so here and let me turn off price. This is important. This is important for just Ruby. Ruby, where's the new weekly profile forming inside the ES Mini? It's above all of its prior profiles. This is a bullish indication out here. Granted, the structure is bearish, but overall, bigger term, this is a bullish picture. Steve Rhodes with TFNN. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Russell 2000 equity future contract on the screen. And as you take a look, I'm going to ask you to just initially focus in on the weekly chart out here. and we take a look at the weekly chart, what is that you notice about the year 2021 right now? And 2021 would start, in essence, right here where my candle's at. That was the first week, January 4th. What sticks out to me is that good old-fashioned consolidation. So I'll draw it in. It didn't start right then at the beginning of the year, but relatively close. So in that consolidation pattern, you've got, in essence, double tops. You've got double bottoms. And when I say double, areas that have been tested in the past out here. So we're roughly in this vicinity, I would say. Here is our sideways consolidation. So, Ruby, the very first thing that you want to understand is that it's just been an entire sideways consolidation for all of 2021. Now, I bring that up because consolidation markets are difficult to trade. You want to be selling up at the top. You want to be buying down at the bottom level. There's a new weekly profile that is attempting to form. We won't have confirmation of it until Friday, but it's pretty solid at this stage. And it really just communicates to you and I what we just took a look at. And what I mean by that is the low of the current profile is below the prior profile. The high of the current profile is above the high of the prior profile. This tells us of a consolidation. I went back as far as I could. The ticker symbol changed. And as far back as I can go in it, the Russell 2000, that is, I don't have another consolidating example out there. But what we're getting is message after message, whether it's on the daily time frame or the weekly time frame, to prepare for a consolidation. Now, just because that's its message, that is the current message out here. If price breaks to the upside or the downside, then we have a consolidation breakout. And I don't know when that will occur or if it could occur. I just know that in this unfavorable seasonal cycle, odds favor more likely than not. We're not going to see any kind of precipitous decline, 20% decline into October out here. And then we're just in this, we're in a range-bound type market. And it just got a little bit more range bound. So I hope that helps you out, Ruby, with regard to the Russell 2000. Really, the message is coming from the TAS market profiles for multiple instruments in their time frames. Let's go to our first question. That is our second question, I guess, that is out here. And this is coming in from Mimi. And Mimi wants to take a look at AMD. So let's pull over on our black background charts out here. Let's pull over our TAS market profiles, AMD, see how it's trading. And, it's a nice day today, nice week, nice month. What's Stevie mean by that? Looks like it's all-time highs. It's above daily, weekly, and monthly TAS market profile. So now we want to go see if there's any kind of topping signals that might be in play for these different time frames. As we begin with the daily time frame, turns out that this bottom with a nice Rhodes Momentum Indicator bottom in a wave 7, letter G on my screen out here. So that was a nice bottom pattern that it had. Had a nice key reversal session to confirm that bottom back on May 19th. Now where are we at? Well, we have wave number 7 that is present. That is letter G. And we have bar number 9. So, Mimi, I would not suggest that you try to chase this. I wouldn't suggest that you sell it if you're long, but I do want you to anticipate that there could be a short-term top inside of AMD that forms either today or tomorrow. Now, whichever of these 2 days has the highest high, you want to watch that high, whatever that is. Because if price begins trading above that, closes above that, really on a daily bar, that tells you about a strong upward momentum move that is in play for AMD. That is the message of the daily charts out here. The weekly time frame also is an ATD9 count. So on the weekly, this happens to be the bar following bar number 9. So whatever this high for the week is, for that specific for AMD, that's the key level that you want to watch. Because if price is trading above that, closes above that, boy, that tells you about a strong momentum move for this time frame. But 2 topping signals right now in AMD, daily and weekly. And the daily says you can still see a higher high tomorrow and keep that pattern in place. So you're really going to watch the daily time frame out here. The monthly time frame says, I don't know what you guys are talking about. I don't understand your TD9 stuff. I don't need what your 7th wave move. I'm not a baseball game out here. And so it's saying, hey, Steve-O and gang, I want to continue to move higher. We know that the daily and weekly will influence and the monthly time frame. The monthly does not have any kind of major signal out there, nor do I see it on a 30-minute chart or 65 or, geez, the 130-minute chart right now. Price is trading above, and I believe this will close at about 2 o'clock. It's trading above its TD9 count high. That says that AMD wants to continue to move higher out here even though you're close to getting some type of topping signal. So, Mime, I hope that helps you out. You had a second request, which was to take a look at the financial sector, the XLF. So let's go pull over its daily, and it's a weekly, and it's 30-minute time frame chart. So as we take a look at the daily out here, this generates a Rhodes Momentum Indicator bottom. What price is struggling with are the sellers. And Mimi, you and I know exactly where the sellers are, which is at the price point of $36.92. And $36.92 is the top of its daily profile. If we can see two closes, the XLF that is, above $36.92, that will signal a move to $38.24. That's its TD9 breakdown level. And that's the message of the daily chart. The weekly chart, when it comes to the financial sector, has wave number 7 as the top. Price pulls back into the support of its weekly profile. It's now above the top of that profile. So this could be saying it wants to target 38.06. We know that can't happen until they take out the sellers that are sitting at $36.92 out there. And that's really all I've got for you on both those. So to summarize, AMD could see a top here by tomorrow. Watch the high of whether it's the highest high today or tomorrow, and that will give you a clue out there. And with regard to the XLF, it's got a nice bottom, but it is struggling to take out the sellers that sit at the top of that daily profile. So thanks so much for writing in. I believe there was a question for Facebook inside the Tiger's Den. Danny from New York, was that where your question was, to take a look at Facebook out there, or maybe that was posted for somebody else? Either way, we're going to go ahead, since we don't have anybody in the queue out here, we're going to go take a look at Facebook, which is pulling back into the area where support is at, which is the bottom of its daily profile, 351.72. The low so far of the trading session is 352.69. Volume today is about 7.6 million shares so far, going against a breakout of 33 million shares. So Facebook may find support at 351.72. Let's pull over our other charts, see what else we can figure out is going on pattern-wise for Facebook. On the daily time frame, Rhodes Momentum Indicator top because of that gap to the downside. If price did close below the bottom of its profile, which is a real possibility, knowing that you've got a valid top, that could signal a pullback all the way down to 303, Danny. We don't have that confirmation yet, but a close below 351.72 would be that signal to you. The weekly charts tell us what? The weekly charts tell us, what do they tell us, Steve-O? Weekly charts show Facebook with a TD9 top. And if price is unable to hold its green oscillator and change line, Danny, that currently, and this will change during the week, but right now it's printing out and the price is below that level, 354.82. If price does close below that level, that would then say, okay, I head back to the top of my weekly profile, 346. If I close below that, 330, below that, 326, and then finally 303.57. So there is most certainly reason to be cautious about Facebook. A weekly confirmed top, a daily confirmed top, and what are we doing on the monthly time frame out here? Monthly time frame is saying, I don't know what you guys are talking about. If we're going to pull back, I'll find support at 325.72 or thereabouts, another $25 lower than where we're trading right now. Danny, anything else you need about Facebook? Let me know. Just write that in the Tiger's Den. Otherwise, we'll be back in just a few.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. 877-927-6648. If you'd like to give us a call, you can always send me an email. Do it quick, though, steve@tfnn.com. Put in a radio show question, if you would, if there's an instrument you'd like me to take a look at. We got a request inside our YouTube channel, and this is a take a look at the 30-year Treasury out here. So right now we can see that the 30-year Treasury, upper left-hand panel, actually all of these are, just different time frames, but the 30-year Treasury is trading above the top of its daily profile. That's at 164.25. So when you trade above the top of a profile, it says that you go to the next profile, maybe at a different time frame, or you go to wherever you see the next resistance level. Well, turns out there's a couple of different trend lines that Stevie's got drawn in here. In odds favor that that's where price is headed to, which is about the 167 level. If price can close above these trend lines, 167, let's just make it the high of July 20th, and that's at 167.04. If we see it close above that, then the price target to the upside for the 30-year will become the bottom, or the center, I should say, of its quarterly profile, because that's the only quarterly profile that it would not be trading above. So right now, price is trading above the daily, the weekly, and the monthly set of profiles, all signaling that price should move to 171.01. Well, turns out right in that 171 area, we've got the center of its bearish structured quarterly profile, and we've got those descending trend lines. Now, I'm not saying that price can't take those levels out, because it most certainly can. And should you see a close above 171.01, that's going to signal to you and I that price should get into the 181 and 13/32 level. That would be the top of its bearish structured quarterly profile. Of course, along the way, on any kind of advance higher, a new profile could form. So right now we just go with the profiles that we have. If I look at the 30-year Treasury using Stevie's white background charts on the daily time frame, what do we have? Not much. What we do have is prices trade above its green oscillator and change line. So it's above two bullish elements there. And as long as price remains above that and above the top of its profile, its recent high should be tested. Whether it gets taken out, another story, but it should at least be tested. On an intraday time frame, here's a 10-minute chart. Do I have a topping signal or a topping pattern? There's an A to B equals CD that I could easily draw in. Here's a bearish engulfing candle that forms at the top of its profile. We've seen that it's trading with inside on a 10-minute basis inside a bullish structured profile. This is bar number 7. That says if there's going to be a bottom, it could form within about the next 40 minutes. Out here. So we've got 145. So maybe by about around 220, you could see a bottom on a 10-minute basis inside the 30-year Treasury. Ideally, that bottom would take place above the 165 and probably 80%, 80, 30, about 24. So about 165 and 24, 30 seconds out there. Let me look at the 30-minute time frame chart. So it's just showing a pullback, nothing broken at this stage here. To be broken, you need to see a close below 165. No topping signal on the 30-minute time frame, but price likely pulling back to its oscillator and change line, and that is around that 165 and about 165 and a quarter. 165.2423, something along those lines out there. So when we take a look at the 30-year Treasury, yeah, it looks like right now maybe a short-term intraday retracement, but as long as price closes over that oscillator and change line, stays above the top of the daily profile, a test of those recent highs is what you should anticipate. And that's from our YouTube channel. Thanks so much for the request. Looking at emails out here, we've got two that have come in. One from Eddie in down the street. Hey, Eddie, thanks for using some bold print and some bigger font so Stevie's eyes can see these. Do you foresee any time in the near future that the U.S. would lose its status as a major drawer on global capital flows? I don't know. When you say, you said near future, so no. By near future, are you talking about the next year, 2 years, 3 years, next 6 months? I'll settle for any of those time frames as the answer is no. We're going to, look, we all know, all we have to do is read. We're all going to, or not we're all, but across the globe, or just read, just go to the IMF website and go to the Bank of International Settlements website and do some reading. I realize it can get boring out there, so have a nice glass of Cabernet, Chardonnay, or whatever it is that gets you into the mood for reading out there. But if you read about all that stuff, you know that all these governments out here are coming after every single possible, their fair share. Now, when they say their fair share, they've kind of communicated to you that their fair share is against the big guys out there. That's a bunch of BS. Their fair share is every single tax dollar that they believe that they can collect out there. And so they want to have a digital currency. They want no paper out there whatsoever. The guys or gals, the areas where they're in the biggest amount of hurt is over in Europe and Japan. So it's over in Europe and Asia, basically. Why are they in such a world of hurt? Because first they don't – because they're at negative interest rates. Negative interest rates. Yeah, go ahead, be good, work hard, save your money, put it in a bank, and get back less, basically, in essence, is the theory there. Well, that doesn't fly, and there's no way out, because if they start raising interest rates, it just increases their costs and their inability to pay back the debt that they've taken out. So that stuff is going to likely – so if there's going to be a crash, Ruby, crash over in Europe or in currency markets, or we don't know how people are going to respond. But do picture this, folks. That's coming to a theater screen near you, too. So when, Eddie, you asked the question, is there anything in the near future? Yeah, as this digital currency stuff gets rolled out, and as it gets rolled out, those of you that are in the Bitcoins and all of those Coinbase things out there, be extraordinarily careful. If you really believe that governments are going to – all that stuff is doing out there is just trying to create a market and get it out there so it makes a transition into digital currency easier. But the governments across the globe are not – they don't want competition. They don't want any printed currency out there. And but to answer your question, no, I don't see anything. We will be the last peg to fall. And what they really want is they really want to have digital currency everywhere, and one currency. That's going to be an interesting aspect. So, Eddie, that's my take based upon my readings out there, and I think many people will draw that same conclusion. You say, if not, is this the key factor in keeping the market from crashing, or at least a 10% pullback? So I don't want to get too caught up into the percentages or so forth. But yes, the fact is that. I pointed this out to friends. I think I shared this story once. I don't remember if it was this show or what have you, but it was with friends a couple weeks back. And they listened to the show, even though they're not technically inclined or what have you. And they were really asking, trying to understand this global flow of capital, very much like Eddie and everybody else out there. And I just simply went down the list. I said, well, do you trust the government in Russia? They said, no. Do you trust the government in China? No. Do you trust the government in Cuba? No. Do you trust the government in Venezuela? No. Do you trust the governments in the Middle East? And the answers were no. I said, do you trust, and finally got around to, do you trust the U.S. government? And then they paused, like most people would, and they said, well, I trust them more than the other ones. And I said, you just answered the global flow of capital. It's really that simple out there. It needs to park itself in a place where it has some kind of confidence. Whether it's real confidence or not, that's beside the point, and you and I track that. And so if you're asking, Friday was a pretty good example. All the markets across the globe were down. And what happened coming into the close in the U.S.? Yeah, so that should have been that was a tell about global capital. Steve Rhodes with TFNN. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So the question is, do we really want a digital currency? I'm all for progress. I think that's probably the worst kind of progress we could expect out there. Do you really want the government? I don't care which side of the aisle on. You know that I'm on neither side. I hate both sides out there. That's why I don't really talk too much about politics, because I'll piss off everybody out there. But in this case here, do you really want to trust your government with every single one of your dollars that they could, their fair share? They could take their fair share whenever they want to? Think about it. Because that's the direction that things are going. Anyway, let's go to our next question out here. This one from Greg. And Greg says, would you look at the PINS? That is pin trust. We absolutely will. You've got an A to B equals CD to the downside, but given the volume, You're asking, so you've got it at 58.63. I've got 62.32. So let me take a look at our daily. You've got an A to B equals CD. I'm not sure what time frame it is you're looking at, but the A to B equals CD pattern that I'm looking at here that was confirmed last week is this A to B equals CD. So, Greg, I'm using right now, and you may be using something different. My apology if I'm using something different. And that is the July 7th high. That's our A point. Our B point then is going to be the low from July 19th. And our C point is the retracement into the high on July 23rd. 1-to-1 would have given us 62.32. 1-to-1.272, 58.08. And I think your question was, hey, based on the volume and making that level, does that suggest that it heads lower? The answer would be, yeah. It does. What it suggests is not buying it. When you have because it's a wide-ranging bar. I know it doesn't look wide out here, but if you connect the close of the prior bar with the close of Friday's bar out there, it's the widest ranging bar that this stock has probably ever had. And that's not how you make a D point. How you do make a D point, though, Greg, and all you have to do, you don't have to sit back and wonder, is you need a bullish reversal candle. So the A to B equals CD to the downside inside of Pinterest will be complete when it completes a bullish reversal candle. I don't know where that'll be, but I know that's the outcome that we'll see. Folks, stay tuned for the Power Trading Hour. If you have to start your Monday, have a magical one. We'll look forward to seeing you again soon. Take care and be safe.